Good morning, it's Jeffrey Christian of CPM Group. It's the 10th of January, Tuesday, about 11:30 here in New York. Gold's trading around $1,880. Silver has come back off a bit, and it's around 2373 as we speak. I wanted to talk today about effective gold and silver investing. Before I do, let's show the dollar again. I used these two charts on the 6th of January, last Friday in our video, and I think they're worth revisiting because there's still a lot of people out there who keep talking about the dollar collapsing, and it has collapsed. It's gotten all the way back to where it was, say, about 4 months ago. And it's still much higher than it has been for much of the time over the last, say, 20 years. So dollar's not exactly collapsing. The idea that it is and that there's going to be a great reset and all, well, that factors into some of the things I wanted to talk about today. I've been thinking about some words I heard long ago. The first one was, "The man on the radio won't leave me alone." That was Graham Parsons and Tom Brown in a song in 1973 called "The Return of the Grievous Angel." Of course, Richie Furay, shortly after that, wrote a song about Graham Parsons in which he said, "Who's been fooling whom?" The other thing I've been thinking about was something I heard and learned in journalism school. When someone's telling you something, think about why they're telling you that. Because usually people have a motive. I have a motive. I sell research and consulting related to commodities, from investing to production and everything in between. And I tell people things to show them that I can help them make money and save money. Other people tell you things because they're trying to sell you something that you ain't been shown or that you think you want, and they've been trying to scare you into it or lead you into it. There's a lot of bad information out there about gold and silver, as well as politics and economics and currency markets and stuff. And it's a very dangerous place. And you really have to ask yourself, who am I listening to? Why are they telling me that stuff? And is it true? Now, talking about precious metals, I want to look at my notes. But I want to point out something here. There's a seasonal strength. This only goes back to, these two charts only go back to 2019, and you don't see the seasonal strength too much in 2019. 2020, you see a little bit of a blip up in silver prices in the first quarter, and a blip up in gold prices in the first quarter. Although the big move in 2020 was in July into early August. The peaks, and I think both metals prices was August 9th, 2020. But you can also see some seasonal strength in January of 2021, especially in silver, and in the first quarter of 2022, which was partly related to the Russian invasion of Ukraine. There is seasonal strength, and it goes back decades in precious metals. It has to do with a lot of things. Industry gearing up, electronics industries using more precious metals, buying more precious metals to use over the course of the year, putting their demand in place, sometimes through forward purchases. Jewelry industry, Valentine's Day, self-purchasing of jewelry, very big in the United States, Canada, Europe, in January. Valentine's Day is in February. Lunar New Year is a big time for demand for gold, both as an investment product and in jewelry form. Lunar New Year this year is, I believe, January 22nd throughout Asia. So there's a lot of demand that comes in, investment demand as well as fabrication demand for gold in the first quarter and for silver. And that tends to push the price up. Prices tend to subside in the second and third quarters and then pick up in the fourth quarter. That's the seasonality, and seasonality is easily overruled by actual market events and economic and political factors. But seasonality does have an important role in the ebb and flow of gold and silver prices, and one has to pay attention to it. We're seeing gold and silver prices strong in the first week of 2023, partly for those seasonal reasons, and partly for secular and cyclical economic and political factors, all of which may actually quiet down after the first quarter. Just something to pay attention to. I wanted to talk about investing contrasted to stacking. It's been said far too often by people who don't know what they're talking about that I belittle stackers. I do not. In fact, I'm a stacker myself, and some people tell me that by their measures and estimates, I may be one of the largest silver stackers in the world. I don't think I am, but maybe I am. Maybe they know more about the typical and spread of sizes of silver stacks than I do. I like stacking. I don't belittle people who stack. I belittle people who are gullible investors who allow themselves to be duped by the man on the radio. Now, that said, stacking is very important. Investing is even more important. You've seen these charts before. These are 3 hypothetical portfolios that we have kept track of really since December of 1980, when we started keeping track of our own intermediate term investments. And you can see the little red bars, long and hold. If you had bought gold in December of 1980, when we started keeping track of our own buy and sell intermediate term recommendations for gold and silver, you would have doubled your price of gold today, or maybe even tripled it. If you had gone long and then sold your gold and moved the money into treasuries when we were saying, hey, don't be long gold right now from an intermediate time perspective, you would have done a lot better. And if you had gone long when we said go long and gone short when we said go short, you would have done tremendously better. The same is true with silver, even more so. Silver is gold on steroids. It's high octane gold. It's more volatile. Silver, along with natural gas, are the 2 most volatile commodities in terms of price volatility historically. You won't make those kinds of returns stacking. Stacking makes those little returns on the red lines. Investing in stacking make those big blue bars. It's not that stacking's wrong. Stacking is good. Having gold and silver as a capital preservation tool, a form of savings, a way to store some of your wealth, a way to diversify your portfolio, that's very important. But investing is even more important. And that means buying and selling, given where the prices are and where they've been, and cyclical and secular moves in the underlying economy and political environment. It means hedging your positions, using futures and forwards and options and ETFs and other tools that have been made available to you. As with dynamite, those tools you need to know how to use those tools. Otherwise, you could really hurt yourself. Stacking for the wrong reasons, well, it's good to be stacking, but you probably won't necessarily make as much money as you do if you stack for the right reasons. What are those right reasons? Well, as I said, capital preservation and capital appreciation. You want to protect yourself and diversify your wealth and your portfolio. A portfolio is a portion of your wealth. You want to protect yourself from financial market volatility, banking market instability, currency instability, inflation, interest rates, stock and bond market volatilities and instabilities and downward periods. Real estate, ups and downs. We've seen them both this year or last year. Economic problems, broader economic problems, and personal ones. Crises, personal crises. All of a sudden you need money. It's good to have some of your money some of your wealth in gold and silver. Interest rate fluctuations I mentioned, inflation I mentioned, political instability, and so much more. There are really strong reasons to be a stacker. There are really bad reasons to be a stacker too, and if you're stacking for those bad reasons, you'll do well, but you won't do as well as you will if you stack and invest intelligently from a position of knowledge, from a position of rational thinking, and avoiding all those people who would dupe you, because what they really want is your money. So that's all I have for now. Talk to you later in the week. You can get on the right side of these markets. Our yearbooks are coming out over the next 6 months, 7 months. You can pre-order them on our website. You can see other things that we've been writing. We've been posting documents that we've written for Monex and for Gold Bullion International, both on our website and on our Bloomberg pages. You can become a retail investor product client and get additional information, including how to invest and when to take profits. It's all available on our website. In the meantime, I'll talk to you at the end of the week, I hope. Take care of yourself, take care of those around you, take care of the whole world, because it needs taking care of.